31 minutes? I just want to see the Prodigy play piano. How long do we have to wait for her to start playing piano here? 31 minutes? I just want to see the Prodigy play piano. How long do we have to wait for her to start? You can't get scared by classical music, don't you start that. It's just like little intro music. She comes across a little bit crazy, right? No doubt she's very good. Alright, that's enough. Back to trading, boys. I hope everyone's had a good day. Fairly interesting market now. You didn't get the US selling. Alright, so this US didn't sell off. Now you got the ECB coming up tomorrow. There is a chance we're going to get a extended rally here. There's expectations that the ECB is going to do something. Euro is broken below 110. Has come back up just briefly right now, in sympathy with the pound after its nice little move on those unemployment numbers. But the fact it even got down to 110 means that, you know, this speculation that ECB will fail and that the euro is going higher may be on the wrong side. You know, I mean, look, it could be that they're just pulling the market lower, then they're going to go higher later. But you can't expect that every time, right? This is not, you know, high percentage type moves that we're talking about. That the market's going to go, that they're tricking the market, right? This is just. I mean, I still think that the ECB will end up being positive for the euro, but I can't deny that this market is pretty weak. US dollars on a rampage throughout the market, so dollar yen's just keeping on. I mean, a little bit more muted than previously, but still being bought up on every dip. Looks like we're going to test that 107 level probably today. You have the Aussie dollar underneath 75, even though stocks are making new highs. You can't ignore that. I mean, that's structural weakness in the Aussie. That's not, you know, usually when there's no news, the Aussie would be extremely well bid up to 77, say. It's the fact that now they're all talking about the RBA cutting, and they're talking about it now the same as they're talking about the RBNZ cutting. The difference in the Aussie and the RBNZ, though, is that the RBNZ have got this, the Kiwi, is that the RBNZ has this update tomorrow, special update. It's almost like its own little special, half-time interest rate announcement. All right, so they're not going to do anything, but they might let the market know for sure that they're going to cut in August. And then, you know, what the market does with that, that's the debated question. I've had a few questions from some good traders coming to me saying they've sold the Kiwi already. Are they really going to sell it off after they do what they announce? Or is the Kiwi going to be caught in the risk-on environment and it's going to be one of them sell the rumor, buy the fact? And that could definitely be the case, right? The same with the Aussie. I'm a little suspect when the market moves so aggressively a couple of weeks before a big announcement. In the Kiwis case, it's a couple, it's 3 or 4 weeks, right, before they actually RBNZ meet. So this update comes out and it suggests that they're going to cut rates. The market's priced in 90% or so they're going to cut rates anyway. So, the reaction to more negativity tomorrow will be very interesting here in the Kiwi. If the Kiwi rallies tomorrow, even though they signal they're going to cut rates, that may tell you that the actual direction of these commodity currencies will be higher. And so, look, I was talking yesterday about the downside. Yeah, the downside's real, but the chances that the market, it's very hard to sustain sell Aussie and Kiwi when stocks are making aggressive gains. So primarily when we talk stocks, we mean global stocks, but we really mean US stocks. US stocks set the agenda. So this is most prevalent if you're going to look at, say, something like Kiwi yen, right? For Kiwi to keep falling faster than the dollar yen's rallying, that means Kiwi yen has to keep falling as stocks are going higher, and that just doesn't make sense. So be very careful if the market gets a little bit uppity tomorrow after they are bearish, if they're dovish, we should say. If they're dovish in their update tomorrow, get very concerned that, if the Kiwi rallies, maybe don't sell into that rally. Just that's my little bit of market experience tip. If the market rallies tomorrow when it should be going down, then it's probably just playing catch up, risk on. If the market sells off tomorrow, then yeah, we have to respect that. Yeah, I'm still short, I think. Well, I'm short via the Aussie dollar, but my Kiwi I took profit. I just don't know. I don't like selling. I don't like selling the Aussie and the Kiwi anytime stocks are rallying, and the US stocks are just relentless. This is day 9 of the rally. Longest I've seen is 13 days, so it can go high. Some of the earnings out of the US have been quite strong as well. So something's going on, right? I'm not reading. The market's decoupling a little bit from stocks. That's making it a little bit harder to read, say, Euro and the Aussie and the Kiwi. I would like stocks to be going sideways or down, and when selling the Kiwi and the Aussie. The reason to sell is very real. The RBA and RBNZ are going to cut rates, but I don't know how much you're going to get from that pre-game, and also what the reaction will be once they do it. So let's just be more cautious than usual. The more the market rallies without a stop, like the US stock market I'm talking, so this is day 9, the more rallies without a stop, the more ridiculous things get. The more decoupling and divergence you get in the normal correlations in the market. The more that they can do their own thing because they sort of get fatigue following the US stock market. But you can't ignore that the risk is on. Keep an eye on oil. Oil's weak as well. Weakness in oil is keeping dollar CAD capped. So dollar CAD is not rally. Weakness in oil is keeping dollar CAD pumping higher. It's rallying even with the stock market, quite strong. The CAD's getting sold. US dollar is strong everywhere, right? It's just some weird stuff happening here. US dollar is not a risk-on currency. Dollar yen goes up. Yeah, that's right, because yen is more of a safe haven than the dollar, but everything else should be well supported. So if there's something happening in the background, then I'll have to have a look into that. Maybe the US yields have started to move. I haven't checked them in the last 24 hours. But definitely surprising when I woke up here in the Kiwi, so the euro was breaking 110 pre-ECB. I don't mind selling the Aussie and the Kiwi. Don't get me wrong. I don't mind selling them on the reasons for cutting rates. It could be worth 500 points, but the difference between this time and in April, May, when they cut last time in RBA, is that stocks on a rampage, and that's a different dynamic. I was going to do a earlier stream today just because I'm trying to get some stuff going on at night, a little bit earlier. Maybe, I mean, tomorrow I'm probably going to do the ECB rather than all time. This was actually quite an easy trade setup. So this is a DAX going into the night. Now we saw the US stocks rally, but the DAX fell off yesterday. So the feeling is that we're going to have this pop at the start of the European session. We get the pop, then we get this sharp selling. All right, now that's fine. The sharp selling got caught though before below 10,000, came back up quite quickly. In that scenario there, maybe five times out of 6. It's a funny number to begin with. Say 8 times out of 10. When you get that pop back up, going with the original direction, and the market got caught higher than the low, 8 times out of 10, we're going to take it higher than that previous high. So that's something with the DAX trading. If you want to learn a bit about DAX trading, when you get these sharp reversals, so this is at the start of the futures. This is at the open of the cash. All right, so there's a little bit of time variance there. I should really point out that's very critical. So the first pop higher when the futures open, cash opens, goes back down, gets caught back up, starts to rally. Very likely we're going higher on the day. That you learn that if you trade the DAX a fair bit. You can sort of tell that it's almost like these guys are going to get stopped out. If it was just profit taking, it's on today on the rally side. You get it. I mean, we'll talk about it. If I started streaming at 5 o'clock, which I may do at some point, 5 o'clock my time, which is 7 GMT, 2 hours earlier than today, then we would be talking about this sort of price action at the beginning, because this is all DAX is. All DAX is in the first hour you set your direction. But that's a bit complicated. I don't want to go off on a tangent there about the DAX. So this risk on market, while we've got Aussie and a few of the pairs selling off, does provide you opportunities. Yeah, I mean, if you don't believe the Aussie sell-off, you can just buy Aussie yen. If you don't believe the Kiwi sell-off, you can just buy Kiwi yen. Not particularly the trades I'll be interested in right now. I am more interested in something like the euro yen. I do think that has potential, a lot of upside. But I am actually going to wait until we get some buying after the ECB before I hop on. Because if we do get it buying after the ECB, I think that we can potentially get up to 300, 400 points over the coming weeks. So I will be. But if we don't get buying after the ECB, then I'm going to have to change my view there on the euro. How this is affecting though the euro Aussie, which is one of our key trades going into that ECB, is that the euro Aussie came back down. I'm all for buying this if US stocks weren't surging to fresh all-time highs again today. Yeah, I'm all for buying this. It just makes so much sense that it's going higher on the divergent between B and the RBA. I just don't want to buy when stocks are rallying. I say I don't want to sell Aussie when stocks are rallying. Maybe we can get to another pair, similar scenario, but just we'll leave that to the side. The other trade we're in is a long pound Swiss. Fortunately, we're getting some comeback there. We were definitely in too high on Wednesday. On Monday, sorry. So that was a bit of a mistake. it was just too keen. Yeah, a bit more selling came through on the pound than previously thought. Than I previously thought, and maybe the pound is actually going to be weaker than suggested. That is a very bearish pattern actually, so that is not good. Yeah, but the once again, pound yen's probably going to catch it. Pound yen catches it with the risk on trade, then this can change the dynamic of every pound pair. So we want to see who the prime mover is. It might not be the pound, it might be the pound yen in a reversal. No, just relentless buying. So yeah, I'm not confused, but I'm hesitant. I'm hesitant to sell the Aussie rally. We're not even getting a rally, right? So there's no good level here to sell. Selling towards 75.40. I was happy to do that today. 75, 50 even. I don't know. I'm conflicted about the Aussie. And there's no reason to trade when it's not clear what's going to happen. I mean, it looks clear technically that it's going lower. But the type of times when the technicals don't work is when something else is happening in the market, like the US stock market rallying sharply. That's when this sort of gets reversed, and that's when it can get messy. Because the shorts have a real reason to be short. This RBA anticipation is probably correct. Let's have a little look at the Kiwi though. Kiwi's held 70 so far. Kiwi's held 70, and this is starting to wreck one of our other favorite trades that we have going, which is the Aussie Kiwi. So Aussie Kiwi here, I bought this morning on this price action because I was waiting for basically the pullback to finish and then some buying to come through. So I thought that was it. Alright, then we got that second leg of Aussie weakness while the Kiwi held. We went back a little bit further. And it's okay. Look, it's still okay. We're still buying. But if you look at some of the candles, or if you look at some of the time frames, it looks pretty nasty. Look at that. I mean, wow. Do you want to be long in that? That's some pretty big shooting stars, right? That's some big wicks. So yeah, it doesn't look great on the daily. I mean, honestly, technicals don't matter that much on this pair. It's much more play with the majors, but you still don't want to see that on any pair you're trading long. I'm talking about this. One of our traders actually has got some heavy longs at the moment. That's Kiwi Killer. So someone's saying it's 11 lots long. Hope so. Hope it works out. Hope it works out for him and me. Really, we need Kiwi to break that 70 cents to get that continuation going. But Kiwi's already done a fair bit of movement. Aussie was playing a little bit of catch up, so we'll see how it plans out. Tomorrow we have that OCR. So that OCR update tomorrow really it's required that there was a Kiwi make gains, substantial gains, back above 107 tomorrow. Have to be doing this update tomorrow when we're talking about the ECB. Have to be doing this update, and the Aussie Kiwi has to get back above 107. So that'll be my little key level I'm watching. Alright. That's enough ranting today. Let's have a look at some of these trades. Alright, Magic's got a couple of trades. Long dollar CAD. I mean, long dollar CAD was nice yesterday. It's pretty nice today. Just keep an eye on oil. If oil turns, then get out of it. At the moment, the oil's been sold on most rallies, so there's no rush. There's no rush at the moment, and the US dollar is quite strong. So we get past this little heap of resistance. There's significant topside. We're talking 134, 135, quite easily. But similar to the Aussie, I mean, similar to the Kiwi breaking past 70, it's got a, the burden of proof now is on the bears, while the stocks are rallying so sharply. We've got some short Kiwi. Yeah, nothing wrong with short Kiwi. Just, we need to see that 70 break tomorrow. 70 break with the OCR. If it rallies because stocks are too strong, and sell the rumor by the fact, that's the warning sign. That's the, I said to you earlier, don't sell into that rally tomorrow, because that's a dangerous rally. If there is a rally. All right, this next trade, long Aussie Kiwi. Yeah, we just looked at that trade, and long dollar yen, short dollar yen. I mean, it's so hard to sell it. I'm just not into that. There hasn't been any structural damage done to this pair. There isn't really any significant concrete news that this rally is based upon. It's all rumors, but the price action is too strong to sell. And while stocks markets are rallying, this one is still respecting stocks. So you're basically selling US stocks if you're selling dollar yen at the moment, and that's all-time highs, but you're against some pretty strong sentiment. So there's plenty of time to sell when the market turns. There's no reason to be the hero, yeah? No reason to be the first to sell. So sticking to the crosses makes a lot of sense. That's enough of the trade ideas. Let's have a little look at research. See what's going on today. I mean, most of the banks and most of the analysts and traders are a bit bamboozled at the moment. It takes really big balls to keep buying, yeah? I mean, I'm not talking about... It takes more balls to sell the dollar yen than to buy them. But it's quite aggressive to keep buying up at these levels. So it's like, I think a lot of traders are sitting on the sidelines here and just thinking, wow, what's going on? Whatever happened to normal pullbacks? A little bit of technical information. Not much has changed since we last talked about this, but it's good to still see. I mean, the 200-day moving average on the dollar yen is still significantly higher, right? People forget how far it fell. We're just back to pre-Brexit levels now. I mean, pre-Brexit it was hanging around these levels. And Aussie's still got a lot of room to move to the downside to find its 200-day moving average. So, and so does Kiwi. So it is. It's good to always check this stuff. It's good to see relatively how far we are still into certain pairs. Euro yen has significant topside, right? And the DAX is still underneath its 200-day moving average, which is absurd, given what's happening with the rest of the markets. The underperformance of DAX needs to be accounted for. It really does. It really needs to be accounted for. You know, finding the turn in that pair, that would be fantastic risk reward if you can get the, you know, find out the individual stocks within the DAX 30 which are underperforming. I mean, everyone knows that Deutsche Bank is in trouble. You know, we can bring up some Deutsche Bank in a sec. I'll bring it up. I'll go find it. And we'll see how it's actually behaving. And then we could probably use it as a proxy, yeah, for the general underperformance. So my main broker is IG, for those who want to know who I trade with. Just because it's easy, so many things about them is easy. They're not the best spreads, but they ain't going away. Yeah, and I'm used to the platform, I'm used to the products. It's got every product you could want to trade, so it's, you know, it's a one-stop shop. So we looked at this earlier, or back in the day, we looked at it with Potter. It's still underneath the 2008 crash. So, I don't know, maybe we use that as a little key. Let's say if it gets above 14, right, we can look for a little bit of outperformance coming through. Maybe from all the European banks. Golly gosh, maybe we have to be a little bit more. Let's just, yeah. I'll do some homework. Find out what the major, you know, the major reason for the underperformance is. And I'll get back to you in the next couple of days. But if it plays catch up with the rest of the market, then you've got significant topside. Where we are in the DAX compared to where we've come from, we're not even back at pre-Brexit levels. So that was Brexit. So we've got 300 or 400 points just there alone. And everything else is just 10 times higher than Brexit. So, you know, that our performance is real, right? So, pound Swiss is definitely moving in our favor here. This is good. This is great. What we want to see is a relentless punch straight above, you know, 131. That'll be the sort of thing which, you know, allow me to continue to hold this trade. At least past this high. So that'll make or break it for me tomorrow. If that's not above that high, then I say to you, I'll close it. So make me close it. Okay, guys? All right. Back to a little bit of research. Okay, so this is the main reason. I thought it would. Whenever things happening a little bit weird in the market, it's always the bonds. Always the bonds. You've heard me say that, in the past. So it's always the bonds, and I hadn't checked the bonds for 24 hours, and looks like now the chances of that December rate hike is increasing. Yeah, so you're getting that relentless US dollar buying coming through against the euro when that happens. It helps the dollar yen rally, and it sort of caps any sort of Aussie and Kiwi bounce, and you get that divergence trade between the Fed and the RBA really clear into focus. Also, what's going on with the Aussie is iron ore's fallen like 10-15% in the last week, and that's starting to get attention of a few traders too. I'll see if I can find it. This is sort of stuff I send out a little bit to clients in the morning, if I find it interesting, yeah. So what we got here is the overlay of the commodity prices and the Aussie. There's a very strong link here, and when you have that big fall in iron ore down to nearly 40, you can see there's still that underperformance here. The Aussie can play catch up. So you keep an eye on this. Keep an eye on the iron ore price. It's hard to read this graph, but if they didn't put the black one on, it'd be a bit easier to see. If you overload just the iron ore and Aussie, you'd see a much cleaner pair. So what I highlighted there is very interesting. Inflation is not expected to reach 2% for more than a decade. That's sort of crazy talk, right? Of course, at some point there's going to be inflation. With what they've done in with all the central banks printing, with everyone trying to force stimulus down the throats of everyone, zero and -% interest rates. It's maths that there's going to be inflation at some point. When it happens is up for grabs, but there has to be. You can't print money without inflation coming. If it doesn't come, then you have to rewrite the whole economic textbook, yeah. Yeah, so dollar yen's breaking that previous high. I mean, it's being dragged higher there. Tell Nick. These stocks are just going on a pretty sharp move here. Quite a substantial rally in the pound as well. Alright, so there's any pairs there that you guys want me to have a look at? Any specific pairs, crosses? Alright, so the RBA is now at a 65% chance of cutting. Yeah, well, cable's being dragged higher by the pretty decent data and also pound yen. So pound yen's really punching, right now. So if we check out pound yen, it's going double the speed of the pound. So it's almost up two big figures, yeah, since the start of Europe or end of during Asian session. Look, there is still some highs. There's still a bit of resistance. There's still that residual sell the pound type feel, but this is pretty bullish. So really, I mean, what's important is when the market stalls, and it will stall soon, maybe at 132 it stalls. If the pullback gets bought back up and US buyers continue to buy, then that could put a more substantial low in. And, like I was saying yesterday, that the pound's going to be supported if pound yen rallies, but, that yield change in the US is starting to affect the euro and starting to affect the pound as well. So, although we do have that huge recovery, potential here, it's a pretty even fight right now. If we can somehow get above 133 or close above 132.50 and looking quite strong tomorrow, then yeah, we can talk more bullishly about it. Burden of proof is still on the bulls here, not on the bears. The bears have done their job. If we see a failure at 132 and the market doesn't pick it up and it falls back and we're here around 131.20 tomorrow, then that's still a pretty bearish picture. I think there's a lot of appetite to buy the pound, yeah? Given the right signals out in the market, I think there's a right appetite to buy it substantially, all the way back to 138. But you got to see the right sort of price action to get people more encouraged. You've had that pretty big relief rally already. And so this is asking a lot. I mean, do you feel like you want to buy a pound above 132 at the moment? No, I don't, right? So if it gets dragged higher by pound yen and pound yen just goes on a relentless rampage back up to 133 or 143, then yeah, the pound's going to be dragged higher, and that can change the text on it. Pound Swiss is doing quite nicely, and that can add to the little bit of the change text. If euro pound can break 82.80, 82.50, then yeah, that can change. That can help support the major as well. But you're asking a lot to get the market to do this rally so quickly after the failure of that previous relief rally. And you're asking stocks to keep on going higher. And I said I've seen 13 days. Right, so we're talking sometime in the next 3 or 4 days there should be substantial pullback coming. So the market may get all the way up to 18.7, 18.8, but then the pullback might be 200 or 300 points, and that will cap the pound. Pound is hands down the hardest pair to trade right now. Interesting price action here on the euro yen. On the euro. Now, if we end today at 110.50, right, that's setting up that bullish potential for the ECB quite nicely. Yeah. There was no follow through on this break of 1. So, that's not a good sign. If I was a bear, I would be upset about this price action. Yeah, I think you're okay. You're okay, Armin, to be bearish on the pound. Hedge funds are incredibly bearish on the pound. Hedge funds have been increasing their bets. So you're in good company. All right, guys. Well, that's enough for today. Tomorrow we're going to do the ECB announcement. We'll go over what he says and what's done there. I'll double confirm that with Nick, but yeah, tomorrow I'll probably do the ECB announcement. So that's a little bit later. Yeah, that's another 3 hours later. So you're looking at, instead of 9 GMT, looking at 11:30 GMT. Oh, Nick, you missed Aussie Kiwi rant. I did a big rant on Aussie Kiwi. So what's going on with the Aussie and the Kiwi is that the Aussie got pulled down with the Aussie. So the Aussie got pulled down with the Kiwi as the interest rate expectations jumped across from New Zealand RBNZ to the RBA. And so if you're looking at the odds, Nick, the RBA now is 65% chance, and before it was only 50% chance. So a couple of days ago it was a 50% chance. So they're pricing that in, breaking a few technical levels, getting that Aussie to fall. But we were looking for the Aussie Kiwi to be buying, and that's why I bought this morning. I was looking for the market to find support and come back in. So when the buying began again, I bought. So this is disappointing for me. But I did also suggest, Nick, that the daily doesn't look great. But the good thing about the Aussie Kiwi is it's not a technical pair. It's much more driven by what's going on, the technicals of... I mean, it is technical only in the sense that if Aussie breaks a key level, or if Kiwi breaks a key level, then it will be reflected in the movement in the Aussie Kiwi. But it's not strictly its own technical picture. So the next thing we want to see tomorrow at Thursday's OCR meeting is for there to be a pretty big hint, nudge from the RBNZ that they're going to cut, which is the whole purpose of a special mid-meeting update. So what we want to see is that the Kiwi breaks 70 cents tomorrow, and we don't want to see a relief rally afterwards, because a relief rally afterwards would suggest that the market's found sort of a bottom, and that the risk sentiment, which has been driven by relentless buying in stocks, has taken over. Because if there was no RBNZ cut, the Kiwi and the Aussie would be the strongest pairs in the market, given what the stock market's doing. So it's not a clear trade what's going to happen here. But that sort of scenario with the Kiwi breaking 70 and then coming back up as the risk buyers, the Kiwi yen buyers come through, that's going to come through on the Aussie as well, that sort of play. So the Aussie Kiwi is not going to be directly affected by that. That's just more of just a straight Kiwi talk. But the Aussie Kiwi has many ways to go higher tomorrow. So that's a very important day for us. We need to see Aussie Kiwi above 107, and hopefully for you as well, because I know Killer is long. We want to be doing the update tomorrow with Aussie Kiwi above 107. Then we can sit pretty. But yeah. That's Aussie Kiwi in a nutshell. Alright guys, that's enough for today. I'll be back tomorrow. Big day tomorrow. Nick, I'll probably want to do the ECB if I can, man. If the other boys aren't doing it, I don't know if anyone else has put their hand up to do it, but I think it's a pretty important day. Mostly for the Euro, but also for the DAX. Alright. Too easy.